China just pulled the trigger after Trump's 145% tariffs 2.3T vanishes from US markets. This video discusses the escalating trade war between the United States and China, focusing on the implications of a recent 50% tariff imposed by the US on Chinese, significant financial turbulence in global markets, particularly affecting major US stocks and creating uncertainty among investors. The US and China are the two largest economies, and joint economic actions ripple outwards, widely affecting global supply chains and foreign economies. Alarming $295.4 billion, and accusations of intellectual property theft and currency manipulation have heightened tensions. The tariffs are raising consumer prices, impacting daily goods like electronics and groceries, but the US government's aggressive trade stance against its economy. In response to US tariffs, China has retaliated with its own tariffs and restrictions on US products and technology. Meanwhile, despite the image of economic resilience, China is struggling with its own issues, particularly a looming property crisis, and the ongoing conflict seems to be reshaping the global trade landscape, with China strengthening its ties with developing nations through initiatives like the Belt and Road Initiative, thus slowly decoupling from the US market. Throughout the video, there's a clear depiction of how the trade war may only escalate further. The narrative hints at political instability within the US as well, describing how rising domestic prices due to tariffs could threaten socio-economic stability and provoke political upheaval. Economic implications of tariffs. Immediate market reactions. It's experienced significant downturns, with the Dow Jones suffering a decline of 1,679 points, marking one of the most challenging trading days in the year. Stocks of major companies such as Apple and Tesla saw substantial losses, prompting shifts in investments due to their perceived security amidst the chaos. Consumer impact. The tariffs resulted in rising consumer prices, augmenting everyday expenses by 0.4 to 0.6%, which raises concerns about who suffers most from these economic measures. Electronics, but also in essential goods that impact lower and middle-class Americans disproportionately. China's response and strategic shifts. Counter-tariffs. In retaliation, China implemented a sweeping 34% tariff on various U.S. goods, affecting reliance on American imports by venturing into new markets. This indicates a decisive shift wherein China appears to be reorienting its trade strategy away from the U.S., which historically has been its largest trade partner. Underlying economic challenges. Despite appearing robust, China is facing a looming property crisis and a shortage of advanced semiconductor technologies. These issues pose risks to its long-term economic stability, which complicates the narrative of a resilient adversary to the U.S. trade initiatives. U.S. economic vulnerabilities. National debt and surpassed $36.2 trillion, raising alarms among investors regarding the attractiveness of the U.S. dollar. With the dollar's strength measured by the DXY lingering around 102.7, concerns are growing about a potential devaluation of the dollar, which could lead to a sizable political landscape and immigration policies. Amidst these economic challenges, the video points to the evolving political discourse surrounding immigration policies, noting a slight increase in public approval. However, this is framed as a minor victory, overshadowed by the costs and job losses, which threaten to undermine political stability. Restructuring and decoupling in technology. U.S. semiconductor dominance disputed. Historically, the U.S. has dominated the semiconductor industry, but aggressive sanctions against Chinese semiconductor production capabilities. China reportedly invested $410 billion into its R&D sectors to create a self-sufficient semiconductor industry, resulting in significant advancements in chip design and production. Emergence of competition. China has doubled percent to 30%, emphasizing its transition from a learner to a competitor, ultimately reshaping the dynamics in technology sectors heavily reliant on semiconductors. Notably, advancements in NAND flash storage technology showed China's growing technological prowess, highlight tariff escalation and global fallout. Exponential increase in tariffs. As the sanctions escalated, proposed tariffs reached as high as 104%, dramatically altering the prices of consumer goods and stoking economic anxiety. A diverse range of increases in retail prices, leading to greater economic hardship for American consumers. Market reactions and retaliation. The imposition of tariffs triggered panic in the markets, leading to a significant downturn in Asian and American stock indices, illustrating the interconnectedness became palpable as financial markets grappled with uncertainty, with analysts labeling the situation as a shock therapy threatened to destabilize economies worldwide. Strategic consequences and trust erosion. U.S.-Canada relations. The relationship between the U.S. tariffs with its own measures, indicating a loss of trust that could have long-lasting implications on transnational cooperation. China and the global trade network. China's strategic push towards self-reliance in critical technologies and its refusal to capitulate under U.S. pressure under trade network. China's ability to flex its economic muscles has led to fears of a fragmented global economy wherein countries might pivot away from U.S. markets. Highlights. Chart. Decreasing market impact. The U.S. imposed tariffs led to an immediate plunge of 1,600, reflecting investor uncertainty. Counterclockwise arrows. Button. Retaliation. China responded with a 34% tariff on U.S. goods, marking a fierce escalation in trade tensions. Globe showing Europe-Africa global interdependence. The largest economies must understand that just their domestic front. Money bag. Consumer prices. Average consumer goods have seen price hikes of 0.4% to 0.6% due to tariffs, disproportionately impacting working-class Americans. Building construction. China's resilience, despite strengthening its technology sectors, specifically semiconductors, with substantial investments. Handshake. Shifting alliances. As relations sour between the U.S. and China, China is seeking new markets in Africa and Latin America while progressively lessening its dependence on the U.S. Standing relationships, especially with allies like Canada, are suffering due to aggressive U.S. trade policies, potentially jeopardizing essential supply routes. Key insights. Chart. Increasing boomerang effect. The large tariffs imposed by the U.S. signal a defensive economy. American consumers are left paying higher prices for everyday goods. The phenomenon represents the boomerang effect, where economic actions taken to hurt an opponent come back to harm the instigator. Broken heart. Investor sentiment shifts. A movement towards safer investments like U.S. government bonds in light of uncertainty caused by trade tensions. The drop in Treasury yields indicates a lack of confidence in the broader economic landscape created by the escalating trade war. Magnifying glass. Tilted left. China's strategic decisions. China's response to U.S. tariffs, coupled with, reflects a calculated move to solidify its position in the tech landscape while diminishing reliance on Western technology and markets. Globe. With meridians. Emerging economies as new markets, with 40 to 45% of China's exports now heading to developing nations rather than the U.S. It illustrates currency vulnerability. Questions surrounding the long-term stability of the U.S. dollar as the world's reserve currency are emerging, especially in light of unchallenged debt levels and possible shifts in global currency dynamics led by rising powers like China. Tractor. Agricultural sector strains of tariffs, which might provoke a backlash that influences domestic politics as agricultural exports to China face rising costs and retaliatory tariffs. Chart. Decreasing global economic superpower shifts. The current battle within the tech sector, particularly around semiconductors, from direct competition to systemic economic strategies that see China positioning itself as a formidable global competitor. FAQs. 1. What does the 50% tariff entail? 1.1. It is a significant increase in import taxes on a wide range of Chinese goods, consumer prices. 2. How has the stock market reacted? 2.1. Following the tariff announcement, major indices like the Dow Jones saw a significant drop, indicating